The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 11 o'clock till noon Eastern Time, every market day. My pleasure to be here at 877-927-6648. Thank you to John and Steve, 3 great hours. And let's look at this market. Dow was up a little earlier on, and now it's down 67. What are we expecting? Well, after the doji candle yesterday, in the E-mini, this is one single leg from 813, round number low, on the 15th of October to the 3rd of November, all the way to 2019.25. Let me just type that in here. I've got it on the other side with the 120-minute chart there. And we're expecting that there will be a pullback today, and we're expecting that the E-minis could test the 1995. There is 1979, the 9-period exponential moving average. Unless there's a very negative result tomorrow, what would it be? A negative conclusion that the market is unhappy with the result from the election today, then maybe the 1979 9-period exponential moving average will be tested, maybe even the 1966 area. My suspicion is that a lot of the damage will be done today, and tomorrow will be, maybe early futures will be lower, but we might try for a turnaround. What I am looking at here, now let me just move this away so that you can see I'm moving from the E-mini daily and 120-minute chart, which took out the rectangle support. That weekly chart, now I've had a number of questions. I think I got an email just a moment ago. Let me check it out. You know what, before I do anything else, I need to just go through some stuff that I've been writing down for a couple of days, and then I forgot to say something about it, and then something yesterday and last night came about, and I need to mention it. So first of all, in Sunday's Boston Globe, there was this huge, in the arts and leisure page, arts and something else, anyway, the arts section, there was this very full section on the new Harvard Museum, all the different museums. So it's actually now a conglomeration. Who is the architect that did this? Why? The same guy that did the Gardner Museum, and that was doubled in size. It was really just a small museum. I used to play many concerts there as a guest artist with my group and in solo recitals. It's right in the Fenway in the Boston area. I was a professional clarinetist and conductor. But at the same time, I had always had a market letter. And that was I actually played just a couple of weeks before the Gardner Museum heist. You know, that big one with the Rembrandts, etc. I was always upset that no FBI agent or anyone ever came to interview me, but that's the way it goes. And so back at the ranch, Piano is the architect. He's got a couple of very beautiful buildings, but I'm not so sure about the physical attributes to the outside of the Garden Museum extension. The inside's done very well. Well, he's done this huge thing, 350-something million is the cost of the refurbishing, renovation, and new building. Typical, we're just making a note of all these different things that are going on. Nothing is different from the late 1920s into the early 1930s. Nothing's different from any other period in history where the arts and the foundations got funding in a big bull market to be able to do this stuff. And this is where you get skyscrapers and all mega complexes, mega boats, mega everything. The only thing missing so far is the mega car. We're getting to that stage. So piano did this design, and it looks beautiful. 250,000 pieces of art they've got, and they had to sort it all out and build themselves an edifice. So that's what's going on there. I mention it only because it's part of the mega bull market cycle that we've been following for so long. Now, the next thing is a wonderful article I meant to mention last week on, what is this, from Stocks and Commodities magazine, the smart money, when they fail. And it's a whole big thing about when the smart money fails, because nobody is infallible. The commitments of traders aggregated report is a handy tool for watching the moves of the most significant players in the markets. But what happens when the smart money fails? You may be able to gain some insights from the reports, find out how. Now, this actually goes back to 2008 about the Futures Trading Commission, the traders in financial futures, the COT, the commitment of traders reports, etc. It's a wonderfully detailed study, and this was before the miss in gold. Complete miss in gold. And they've done it many times before, but we always talk about the commitment of traders, and in the main, they're usually correct, but there are times when they completely miss it, and this is about smart money and dumb money. Really a very good, well-written article. Now, I'm not an expert in this particular field, so I'm reading it more as an interested observer, and I wanted to mention, if anyone's interested, it's in Technical Analysis of Stocks and Commodities magazine. This is the November issue. Let me put that aside now. Next thing is, ever since they came on the air, I've been listening to Click and Clack. This is the Magliozzi brothers, Tom and Ray, call themselves Click and Clack. They just ride around the country. NPR plays, and we get them on a Saturday. Whenever I go to New York, they always make us guffaw. You know, there's a difference. The New Yorker magazine, I love to look at New York. I never buy it, but I always like to look at it at the dentist's office or wherever it is. I love to look at the cartoons, and they're always the cartoons that make you kind of smile and say, "Oh, how clever!" Hardly ever do I guffaw when it comes to those cartoons. And as a cartoonist, I should say, as a former cartoonist, I used to have a series very often in the Boston Globe and in different other magazines and things. It piques my interest. However, Tom and Ray, when we get to roundabout just starting into Connecticut on a Saturday morning, going into New York to see my grandchildren and children in Brooklyn for just 2 days, when we get there, it makes the going so easy to listen to them. And I've been listening to them for years and years and years. J&J, you asked old cartoons, show us. So I've got them in my CD introducing the Chapman methodology. I've got a bunch of those. So these guys they're really good. I mean, I don't know so much about the actual, what they talk about, the cause, because a lot of times I try to guess, and sometimes I guess right, and sometimes I don't. But they're really good. Oh, they were good. So then they went into, they retired. Nobody really knew that, because if you didn't hear the news or read the news, you'd listen to the program. Even this past Saturday, I'd missed it so many Saturdays. I said, I've just got to listen. And it's so funny. It's the human side of it that's so funny, because they are really clever when it comes to, does your boyfriend like to drive? Do you drive? All that sort of stuff. Well, I'm sad to say that Tom died, and he was only, we like to say only, when you start getting middle age, you always say only. He was only 77 and died of some form of Alzheimer's. That's really sad, and I have to thank them. They talk about his laugh, and sometimes that laugh could really get on your nerves, but he had a laugh, an infectious laugh, but they were just plain darn funny. I don't know how they came up with that stuff. It's like Seinfeld. How did they come up with those things? It's just so clever. Anyway, it's another loss. We just said Boston's had a second loss. We had Tom Menino, and now we've got Tom Magliozzi. So this is Click and Clack, the Tappert brothers. And they still be in syndicate, so we'll hear the archives of their shows. So now that was another thing. I wanted to also talk about, see, I think I just got an email. Let me just see what the email is, because this is very important. I'd like to answer questions today, if I can find the darn thing. Oh, right there. Okay. Let's see what it says. Hi, Basil. Was wondering if you could address on your show whether the indices are fitting in with your Groucho Marx patterns and what that might mean. Hey, that's great, because we had the question in the den. Thanks for everything you do. I have learned a ton from you. Thanks, Scott. Thank you, Scott. So, okay. This is what I want you to do, and it fits in right now with what we're looking at. You see this V-shaped pattern right here in the Dow? You see this V-shaped pattern in the S&P? In the E-minis, right there. I'll open it up nice and wide. In the weekly chart, I'm going to talk about that in a moment. But I want to do a couple of things first. The Dow is down 68 at 17,297 on this election day, 4th of November. The S&P is down 14, way more than the Dow. I don't know what's holding up the Dow. I didn't have a chance to check it. Dow's only down 0.39. S&P is down double at 0.73 at 2002. 2002 in the S&P cash is going to be important between 2002 and 1997. That has to be a containment area. We'll be watching this very closely. Now, we're going to the comp index, and the comp index, a very broad 2,000 stocks on the NASDAQ, maybe it's more. 4,600 right now, down 38. But this is very important. Gold is trying to find some kind of support here, and I'll talk about that in a moment, because I think we're getting close to at least a bounce as the dollar is in leg C, maybe peak C in the index, and could go to a D and then pull back. So gold is down 30 cents at 11.69. Silver's down 17 cents at 16. When we're looking at the high-grade copper, it's still it's down 5. It's down at 3.01 now. You got to watch this closely. The three areas that must hold. Crude oil is down 2 to 76.55. I'm going to show some things in a moment. And bonds are up 19.30 seconds at 141 and 21.30 seconds. Great call in the den by Oda, who gave us his trade on the on bonds based on the TLT, and he's using a different form of vehicle to trade it, but the TLT is his benchmark. Congratulations. And let's see, with the dollar, I said, is down a little bit. It's down 32 cents, and the euro is up a little bit at 0.07. So now what I'd like to do is, real quickly, I want to do just show this pattern right here. Let me just see. You know what? I'll combine it with our caller right now. We've got Tom in Plymouth, Mass. Plymouth, Mass is rather a famous town or city in Massachusetts and in the country. And we're going to go to Tom in Plymouth, Mass right now. Tom, how are you?
Good morning, Basil. How are you?
I'm very well, thank you.
That's good. I'm looking for an entry point in the TNA, seeing a little pullback here today.
Okay, so that's the question is this the time to get into the small cap bull 3 times series ETF? And we'll talk about that in a moment. Hey, it's a good question. I'll deal with it right now. Dow's down 58, S&P's down 40. Be right back with Tom in Plymouth, Mass.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. We're back with Tom in Plymouth, Mass. So, Tom, you have no position right now. You're looking at it favorably, and you're expecting that it will go at least above yesterday's high of 117.37 on the IWM.
Yeah, well, I was in Friday. I was out Friday. I got out Friday. I couldn't go over the weekend. I didn't think it was. I thought maybe it would pull back, so buy it at a lower price and then wait for it to move up. But I guess that price is. I'm looking at maybe the high 72s unless it breaks the IWM. If it breaks that 115.07. I'm a little concerned about that today. But.
So let me just give you my thinking on this. So the IWM, which is the root position, remember, you always want to be using the root position, either the RUT index or the IWM itself, as your core, because this is a derivative of that. So this is the TNA, which is a small cap bull 3 times shares. Now, one of the things that I'm looking at here, well, two things that I'm looking at that are very important. Let me move this away a little bit. Is that in the TNA? Do you mind if I use the IWM?
Oh no,
I've got a lot more. I've got a lot more information on the IWM than I do in the TNA because it hasn't been out as long. I'm a little concerned in that I've still got, at least at this point, there is a chance that this isn't a peak F, that I could have had an alternate count in the IWM, and that maybe that's not an F but a B. I'll only know that if it takes it out, if in fact the IWM trading at 115.55 in the next 6 weeks or so takes out 120.58, that'll say, you're wrong, mister. This is a recycle, and we're going up even stronger. That would be the case there. It's not that much. It's only 5% higher. However, this is what I'm looking at here, and it fits in exactly with the question that I had a moment ago from Scott, and it fits in very nicely with the question that I had from one of our Den folks. And the question here is, there's a pattern in the IWM weekly that went from 120.58 down to 107.44. That's there. I think it was March the 7th, the week of the 7th, comes down all the way to the low of May the 16th to 107.44, and then goes straight up. I've drawn it in as a cup formation, but it's really also like a V-shaped formation. But because it's a cup formation, the decline sometimes can be much deeper. V-shaped formations, for some reason, have a more powerful aspect. I'm going to go into that later. Maybe Technical Friday, I'll spend some time if someone reminds me about what I consider to be the differences between the cup and the V-shape pattern. So in the meantime, it comes down, breaks the low of 107.44 from the 120.97 high. That's a brand new high. That went to an E, what I call a right arm extension or a rogue wave in the weekly chart, and then it plummets down to the October the 15th low of 103.4. Now that's a lot. 103.54. Let me just type that in so that I can talk about these numbers very specifically. 103. I think I said 54. So what happens is you get a pullback of 17 points. That 16.5 points, 17 points. That is a lot. That's 12-something percent, 13%. And now what it's done is it's gained back a tremendous amount of points, but it hasn't taken out the left side high of 117.80, but it's got real close. So the monthly is saying there's a lot of technically very good action going on. The weekly chart is saying a lot of actions going on that's been very good. How this week on Friday closes out is going to be absolutely really important, and you would expect that under the circumstances that if the election tomorrow produces a result that the market doesn't like, it means it's going to be real tough for that leg D in the Chapman wave, because we've made a peak. See, I'll talk about that in a moment in the daily to unfold. And in the meantime, the 120-minute chart has an arch formation from a peak F doji high, and it says I'm holding really well. Let me just show the technicals here in price, but the technicals are starting to break down. The stochastic's under 80% at 76, and the MACD has just crossed negative, but the price is hugging the 9-period moving average. So it says that the IWM actually turned out to be one of the stronger indices after being one of the weaker ones. That's kind of why you're looking at it, right?
I am, yes.
Okay. So now here's my recommendation. If you're able to put first of all, congratulations. I don't know what told you to get out on Friday, but that was just perfect. Almost the exact high from the big move up. So congratulations. Now, getting back in means that you'd be giving back some of the gains if you're wrong. So I want you to work out proportionality on what I'm about to discuss with you. Oops, we've got a break coming up, and we've got a lot of callers waiting. But let me do this. During the break, I'm going to summarize in my mind exactly what I need to say to you, because I have specific levels to watch, and that's what I'll give you as a recommendation. And then we'll go to Alex and Mark. So can you hold on?
Thank you so much.
Great. I'll be right back, and I'll give you the answer to your question.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization information capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Tom, Alex, and Mark, and we're down 46 in the Dow, down 13 in the S&P, and we're going to go straight back to Tom because I said I'd give him my analysis on the IWM. So this is what I'm looking at, Tom. If you'd be getting in at any level here below what you got out of on Friday, right?
Yes.
Okay. So I'm going to make the suggestion that you could do a little nibbling right now, even though there could be another point to go to the downside in IWM. Why? Because if tomorrow, perchance, things are looked at very favorably in the general market and there's a big rally, you won't be able to get in because there could be a gap up. Maybe the gap up gets filled during the day, but there could be a gap up. Same way, there could be a gap down if we close kind of ugly and then we gap down in the morning. So I'm suggesting you've got two choices. One is to just nibble here, and if there's a gap up to the upside, you might want to wait for the first pullback and then get in. As soon as it goes, whatever happens, whatever position you're in, small or a little bit bigger, if it goes over 117.37 into leg D, then immediately raise your stop on this position. If you have two positions because you nibbled now and you get in again tomorrow, then on your second position, use that leg D. I call it leg D, just 1 penny above yesterday's high. Use that as your benchmark to raise your stop. Here's what I'm looking at. The reason why I'm still positive is that the stochastic is at 94% and the MACD is still very strong. I think that the daily charts in all the different groups are going to go higher. So I would recommend that you nibble here. And if there is a gap down tomorrow, and the market's kind of ugly at about 10:15 before my show, let's say, I would probably say to you, you know what, you can add just a little bit more, but don't do any more adding after that until you see a decent rally that takes your position, say tomorrow's position, into really nice positive territory and maybe overtakes the position that you had if you nibble at it now. Am I making myself clear?
That's great advice, Basil.
So it's a little bit now. If there's a gap down, wait a little bit for the gap to settle, and then I would get in because I don't think there'll be more than another day after that, and then we should start moving higher. I like the technicals. There should be a higher high, whether it's in 3 days' time, I'm not sure, or 5 days' time, but I think you're going to get your leg D, and then we'll deal with it because the weekly will start to improve as well. So that's my recommendation, and I'm completely wrong if it takes out 113.50, because that could be a deeper consolidation. It could take a little bit longer, but I wouldn't be aggressive in this move now until it starts to move to the upside, okay?
Perfect.
Thank you very much for calling, and hey, congratulations on a great trade. Let's go to Alex in New York. Alex, how are you?
Okay, Basil. I called about the IBB.
Yes. Do you have a position?
Oh, yes. I've longed for a long time.
Okay, this is where you've been long for a long time.
Yes.
Okay,
and it was
good.
interesting, on last Friday, it finally got above $300. It hasn't had a close above $300. Do you think 300 is a ceiling?
Well, 300 is just a psychological number. It's nothing I mean, it's just a number, but it is a psychological number. I don't think when you're looking at a sector ETF that the round number is as important as if you were looking at a specific stock. So I'm going to set it aside for now, but just between you and me, that 300 level, just as a nice simple number, is really what will. Let me explain it. How can I explain it carefully? Whereas the IWM, the Russell 2000 ETF, was at peak C. This is only in leg B. Oh, folks, the IBB is the iShares NASDAQ Biotech ETF, and I should mention just for clarity here that we have been long in my opening call since about the third day after the low of October the 15th, and we long the 200% long IBB equivalent, and we've also been trying to add to that position. So I am positive because why? This is a little earlier than the IWM because it's only in peak B. Now, there is a possibility, I often talk about this, there could be a single leg A failure. I don't really think with the stochastic holding for this number of days above 80% in the 90% area that it's likely, and that would imply that the IBB actually tanks there's just horrible news that comes out. The market takes it as horrible news, and tomorrow we're down 130 points, and on Thursday we're down another 130 points. That would be an Eiffel Tower, straight up, straight down, uppercase A pattern, just straight up and straight down. That would be very negative. I just don't see that right now. I still think there are so many people that got surprised by this move. Only folks like you who have been longer-term investors and are holding and keep wanting to add on big pullbacks have been successful. And I think we've got a couple of those left before finally it's the absolute wrong thing to do. So in this particular instance, is there a position that you just want an IBB analysis, or is there something that?
Oh no, I just like calling you, Basil. We've spoken about the IBB before.
Absolutely.
I know your round number thing, and I saw when it had a problem at 300, which the problem's only been a couple of days.
Right, but it did close at 300.10. 300.10 in the 120-minute chart, but it didn't close. That's so interesting. It didn't close in real life. That's interesting. The 120-minute chart shows that it had to close one of the bars at 100 at the very top. It closed at 310. Now, isn't that interesting? But that missed on the daily. Now, okay. So I
had noticed that.
So, okay. So what we're looking at here, folks, let me just get this real clear because I don't want to be fuzzy here. I think this is a move that is really important. There's an up channel. I wanted to show this, and I forgot all about it. Thanks for reminding me. I've got an up channel in the IBB, in the weekly chart, that is remarkable. You know, we've had a 30 or 31-year up channel in bonds in the monthly chart. This is the weekly chart, and I'm going to squeeze this so that you can see exactly what I'm talking about. Look at that, beautiful. From the 125.63 low back in October, November of 2013, it's formed a beautiful, what I call an inside track trampoline base, and it keeps bouncing off that and going towards the upper part, the green dashed line there, which is right at this moment. Then there'll be a part that is going to be the most important part of the move in the IBB, the Nasdaq Biotechs, because I think I'm very close to a signal that's going to say it's a sell signal that might give a deeper decline in the IBB than in some of the other sectors that I think are starting to be rotated into favorably. I think we're looking at some kind of distribution here in the IBB. I might be wrong, and you've been the one that's been perfectly correct in just holding it and buying it. But this is leg E in the weekly. It's going into an area between 302 and 313, and that is going to, if it can get into that area, that's the one I'm going to be watching closest, because that will make the monthly chart leg G/C extend, but then we're getting into the very strong resistance area in the weekly chart, and the daily will be the one that starts to kick off any sell signals. We aren't there yet. I don't think that can happen until maybe next week. So I'm going to be watching it real closely to see if I get a short-term sell signal that might become a deeper sell signal. So in the meantime, it looks great. I think it's going to make leg C any day within the next 3 days, about 302.98. If it breaks down underneath 280, is it 292 right now, IBB? If it closes underneath 283, I might have to reassess everything, but I don't think so. I think there's just enough strength to keep pushing it higher.
Yeah. Well, I'm in a long time. It's hard to shake me out because I'm in under $100.
Yeah, so. I mean, this is it. You don't want to even listen to me. You just want to keep doing your thing. Why? Because not only has it been correct, but it has been the leading index, and you don't want to be messing around trying to get out too soon. We're trading this, and we've done very nicely, so I'm going to try to keep doing that. We might stay in this longer than I think. We'll see if stops are hit, but in the meantime, that's my thinking. So, hey, thanks so much.
And it's odd, Basil. The call previous was talking IWM, and I'm long IWM also.
Okay, well, it's the same thing. So the IWM has retraced really nicely back again. Let's see how it closes the week on Friday. Hey, congratulations, Alex. I love to hear that. That's terrific. Thanks for calling.
Same thing, Basil, and feel good.
Thank you. I'm feeling great. Playing good tennis. That's the main thing. So I'm going to thank you, Alex. I'm going right to Mark in Denver. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you.
So it's my understanding, but you haven't kept it in your corner without going into too much detail with the stock that I have on my list to talk about. I thought we started a position
we can talk about this Rite Aid, yes.
I thought we started a position on the 30th because it hit that number.
Oh, it did hit the number. You know what? I can't believe it hit the number. And I missed it completely because I was, during the day, I thought, I missed the number. I didn't put it in myself. I meant to, and I completely forgot. And I just remind me again. So that was on the 30th.
You had to buy on the 30th.
Oh, at 5:15.
And that was the low of the day. And
when I looked at it, it hadn't gotten to. Oh, you know what? For some reason, I thought I had said 5:13, and I didn't read my own notes because there's just been so much going on in this particular move. Wow. Thank you very much.
Yeah.
So I'll have to put that in. Nobody reminded me about that because I didn't say anything.
It never hit the stop, so I've got it. So I just want to.
And it never hit the stop, right?
If you just keep updating on it, that would be great. That was my request.
Not only will I update it, I'll have to update it because we now own it. And I normally I would have put in myself for something like this. I was just so busy. I was out to lunch there. So
no worries.
Okay, let me just talk about this because I don't want to leave the listeners saying, whoa, what's the personal conversation? We're talking about Rite Aid. Rite Aid I put in, let me just find my notes right here. Moving forward a little bit here. Rad.
30th.
That is the 30th. There it is. It says, and highlighted, buy at 5:15 using a -10 stop. Oh, my goodness. And by the time I got to write it, I was so convinced that we had missed it. I said, okay, there'll be another chance because this candle that I'm looking at might go a little bit sideways. That's exactly what it's done. So now what we're looking at is the stochastics not over 80%. It's a 79% in the daily. The MACD is very good. It had a good earnings report the other day. I don't think it's out the woods. I remember this is one No, I had answered someone who actually gave me the heads up on this, and I kept on looking at it, and then he gave a great call, someone from Massachusetts, and I missed it, even though he gave a beautiful call on it, and that's why I then put it in. Normally I don't. When subscribers send me stocks to look at, I found over the years, I don't know what it is, that I look at it and then maybe my bias is to kind of please these subscribers, so I put it in. Invariably it gets stopped out. I don't know why. And then maybe it might move on later. This one looked really very nice. It looked like it was holding, but I would not be impressed with it until Rite Aid takes out 549, which was the high of the 30th, that same day. It needs to take it out, close above it, because it wants to make the 594 area in the daily chart, that 200-period exponential moving average, the target line to try to fill in the gap. Now, I haven't had a chance to do this. I've had some projects that I've just been working on, and I haven't had a chance to really spend the time that I've wanted to do. I wanted to actually do a webinar one of these days on gaps that not only get filled, but if you look back, you don't even know that there's a gap there because it used the gap as a reversal area. This is not quite like that. I'm talking about stocks like, let's say, Priceline, PCLN, which is gapped down huge today, trading down, 9%, down 110 after a peak D top. Well, leg D yesterday, now a peak D. We'll see if this one starts to repair its damage and is able to get to 1250 in the next 4 weeks or so. That'll be a good example. But it's stocks like that, this is an island reversal as well. This is not, I don't think Priceline's going to do it. It doesn't look too good. But I'll find examples. Maybe I'll talk about it one day on the show, one of my Friday Technical Fridays, and I'll show you what I mean about gaps down that get filled, but then the gap turns out to be almost a trigger for getting everybody out. And there's a brand new bunch of people coming in. And we'll see if Rite Aid is going to have that. I just don't think right now. The weekly needs to close nicely over 533, 535. And then I'll say, nice. Now I can at least try to rate to 578. So, hey, thanks for reminding me. And I really appreciate that. Gosh, I can't believe that I forgot to review that on the next day. I was just convinced we didn't get it. So thank you. And, hey, have a great day, Mark. Thank you very much.
Thanks. Bye-bye.
We'll be back, folks. Dow's down 47, S&P's down 13. And I got a lot of questions about the V-shaped pattern. I'll talk about that when we get back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I had a bunch of questions during the break, emails and stuff about this V-shaped pattern. I want to go to one of our callers, one of our favorite callers right now. I want to go to Brent in Martinez, California. Brent, and we'll talk about the V-shaped pattern if we have a chance afterwards. But Brent, you're looking at what?
Well, let me say you're one of my favorite hosts, Basil.
Thank you very much. Yeah, we got some really terrific people here at TFNN, so I thank you. That's a great compliment. You're looking at...
You were talking about V-shaped bottoms. Well, I think I have a pretty good one in natural gas.
Absolutely, yes.
Yeah, I guess my bigger question is I caught that bottom, and it's always tricky, I know, you want to stay in a position as long as you can, and I'm up nicely in UGAZ and in UNG. I have calls on that, so I just wanted your general opinion on, I think I handle my trades pretty well, but just get your how you would handle a trade like that.
So if we're talking about a V-shaped pattern, let me show you what I would normally do. I would normally grab this chart right here. This is the daily chart. Well, I would have gone to the 120-minute chart, but let's use the 120-minute chart. What I would have done is I would have gone to a significant left side peak that I could use as a benchmark, and I went to the crux, the joint right there between I'll tell you exactly where it is, and I would find a candle that I thought was the most important candle. So this is the joint that the high of at 11:30 on the 14th, UNG, which is the United States Natural Gas Fund, had a high of 21.20. At 11:30 on the 14th. It comes down and it makes a low with a beautiful double bottom doji low at 1895, 11:30 again on the 27th. One day we're going to do this. We'll spend just one whole show looking at how often cycles appear at exactly the right time, the same time. Like this is 11:30. I remember the other day we were looking at something. It was also 11:30. And then what I would do is I draw a right side. That's the left side, not to the bottom. I didn't know it was the bottom at the time. I'm imagining, and I'm choosing a bar that I thought was important, and then I do the right side. And it says that within this number of bars, and if I can just have time to do this green, in this number of bars, if I can get the price to come back to this level, it'll be very important. And then I use the Chapman wave technique of the Chapman wave inside wedge, and I draw a straight line that goes right to, in this case, the bottom of that, which is right there. So the level I'm looking at is 20.71, the high of the 14th at 13:30. That's the candle. I'm looking for a low bar. And I say I can't go left side, right side, because it just looks lopsided. This is a visual thing. This is not exactly where the plumb line would be exact. And I'm saying, but wait a minute, if it can get to that level, and what does it do? Right at 13:30 on the 11th, on the 31st, it goes to 20.57, just misses it, and the next day, boop, it gaps right up. So I would have used that, and then I would have used the low for a left side, right side price time match. Now I'm going to go, and it's gone there quicker. When it goes there quicker, it means that it's an acceleration mode. And I looked at the UNG. I probably would not have got it because I don't usually buy gaps to the upside, so I probably would have missed it every day that I wanted it. Now it's in leg B, and the 200-period moving average of the daily is 22.09. That will be my next target, whether or not it pulls back, because everything about the technicals in the 120-minute chart and the daily says there should be a higher high to come, but the level to watch will be the left side high of 22.29 made on the 30th of September. That coincides with 22.09. That's the area that would be the next level that I would target. So I hope that helps you, and the support right now is at 21.20 to 21. So that's the UNG. Hey, thanks for calling, Brand. So tomorrow,
thank you very much, Basil. Have a wonderful day.
You too, folks. Have a great day. Stay tuned. You've got Options Hour. You've got everyone coming up, and I'll be back tomorrow. Check out my opening call.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.